Carvana was once a shining example of the potential of online car sales, but it's now facing an uncertain future. With a market cap of over $18 billion, Carvana was the poster child for the new wave of disruptive digital businesses. But now, the company is facing a major crisis. Carvana's stock price has been falling for months, the company is in danger of running out of cash, and experts are debating whether it can survive the latest economic downturn. In this video, we'll look at the rise and fall of Carvana and analyze the reasons for its current troubles. We'll also discuss what the future might hold for the company and ask whether it can make a comeback. So if you're curious to learn more about Carvana's story, then stick around. The rise of Carvana. Carvana started with a simple concept: provide customers with an easy and convenient way to buy a car. Carvana's founders realized that the traditional car buying process was outdated and inefficient. The founders saw an opportunity to capitalize on this inefficiency by creating an online marketplace for used cars. The company's website allows customers to browse the inventory of cars for sale, view detailed photographs and information about each vehicle, and even arrange for home delivery. Customers are also able to take advantage of Carvana's no-haggle pricing model, which eliminates the need to negotiate with a salesperson. In addition to its innovative online marketplace, Carvana is also known for its car vending machines. These large, automated structures dispense cars to customers who have purchased them online. Carvana has installed car vending machines in cities across the United States, and they have become a popular attraction, drawing curious onlookers and media attention. Carvana's success is due in part to its commitment to customer service and its focus on transparency. The company has a no-questions-asked return policy and also offers a 7-day money-back guarantee with a 100-day warranty on all of its vehicles. These features have helped the company build trust with its customers and allowed them to differentiate itself from other online used car retailers. Customers can also take advantage of Carvana's worry-free warranty, which covers repairs for up to 7 years. The success of Carvana's business model can be attributed to its focus on customer convenience. The company recently launched a new Carvana Care feature that allows customers to schedule maintenance and repairs on their cars from the comfort of their homes. Finally, Carvana's success can be attributed to the company's use of data and technology. Carvana has invested heavily in data and analytics, which has allowed them to accurately predict customer demand and adjust its inventory accordingly. This has allowed Carvana to stay ahead of the competition and remain successful. The rise of Carvana has been a remarkable story of success and innovation. By providing customers with an easy and convenient way to buy a car, Carvana has revolutionized the car buying experience and has become a major player in the automotive industry. Reasons for Carvana's decline. Despite Carvana's early success, the company has seen its fortunes decline in recent years due to several factors. In this article, we'll examine the reasons behind the fall of Carvana and discuss the future of the company. One of the main reasons behind the fall of Carvana is its inability to keep up with the changing customer needs. When the company first launched, it was able to differentiate itself by providing an easy and convenient way to search for, buy, and sell cars online. However, as the market has become more competitive, customers are demanding more than convenience. They want a personalized experience that is tailored to their individual needs, something that Carvana has yet to provide. In addition, customers have become more aware of the importance of researching a car before buying it, something that Carvana does not offer. Another factor behind the fall of Carvana is the company's lack of innovation. While Carvana was able to differentiate itself from other online car dealerships in the early years, it has failed to keep up with the changing landscape of the car industry. As new technologies and services emerge, Carvana has failed to capitalize on them, and as a result, its competitive advantage has slowly eroded. In addition, Carvana's inability to launch new and exciting products has limited its potential customer base. Let's look at the competition. Carvana faced stiff competition from other online retailers such as CarMax, Vroom, and AutoNation, who have been in the market for much longer. These established companies have the benefit of a larger consumer base, better brand recognition, and more resources. Carvana has had to struggle to keep up with its competitors, who can offer better prices and better customer service. Carvana's marketing strategy has been ineffective. The company has struggled to reach a wider audience, and its marketing campaigns have been ineffective at driving sales. This has caused Carvana to lose out on potential customers and revenues. Carvana's lack of diversification has been another factor in its decline. The company has been heavily reliant on the sale of used cars and has not been able to diversify into other areas. This has made it more vulnerable to economic downturns and has put a strain on its finances. Finally, Carvana's financial performance has been another key factor in its downfall. As the company has grown, its costs have also grown, resulting in lower profits. This has put a strain on the company's finances, making it difficult for Carvana to invest in new technologies and services that could help it stay competitive. In addition, Carvana's customer growth has been slow and its customer retention rate has been low, both of which have impacted its financial performance. Impact of the coronavirus. Before the pandemic, Carvana was a rapidly growing company that had seen its stock price increase from $21 to nearly $90 in just a few years. They had over 10,000 employees and had opened over 250 vending machines across the country for customers to pick up their cars. Unfortunately, the pandemic caused Carvana's stock price to fall as low as $30. This is a huge drop from their pre-pandemic levels, and it has resulted in the company slashing jobs and closing down nearly a quarter of its car vending machines. The pandemic has also affected Carvana's other operations. Carvana had previously offered free delivery to all customers, but with the pandemic came additional costs associated with the delivery process. To combat these rising costs, Carvana instituted a delivery fee for all customers. Another way the pandemic has affected Carvana is through the company's ability to acquire new vehicles. Carvana relies heavily on auctions to acquire its cars, but with auctions being put on hiatus due to the pandemic, the company has had difficulty acquiring new cars. This has resulted in fewer cars being available for sale and longer wait times for customers. Finally, the pandemic has caused an increase in the cost of used cars. With fewer people buying cars and more people renting, the demand for used cars has decreased, resulting in higher prices. All in all, the pandemic has had a major impact on Carvana. The company has seen its stock price plummet, its vending machines close, and its delivery fees increase. The pandemic has also caused a decrease in the availability of used cars, as well as an increase in their cost. The reaction of investors to the fall of Carvana. Investors have had an interesting reaction to the sudden fall of Carvana, which saw its stock prices plummet from a high of $179 in February 2021 to just $79 in April 2021. The reaction from investors was a mix of surprise and confusion. On one hand, some investors were surprised to see such a rapid decline in the stock price of a company that had been doing so well in the past few years. Carvana had seen steady growth in its sales and profits and had even gone public in 2017. On the other hand, some investors were confused as to why the company's stock had suddenly dropped so sharply. After all, the company was still doing well in terms of sales and profits. Moreover, Carvana had a strong balance sheet and a good cash flow. So what caused the sudden fall in the stock price? In the weeks leading up to the drop, investors raised concerns about the company's growth prospects. Specifically, investors were concerned about the competitive landscape in the used car business, the potential impact of rising interest rates, and increased scrutiny from regulators. These worries weighed on the stock price, which started to fall in late March. As the stock continued to slide, investors started to offload their shares, and the stock price plummeted further. The fallout from the Carvana stock's sharp fall was felt not just by investors, but by the company as well. The company's CEO, Ernie Garcia, was forced to step down following the drop in the stock price. The company also announced that it would reduce its workforce by 10%, with the majority of the cuts coming from its corporate offices. In the wake of the stock's fall, investors have taken a cautious approach to the company. After the initial shock of the drop, investors have started to focus on the company's long-term prospects. They are looking for signs that the company can continue to grow and that it can maintain its competitive advantage in the used car market. Carvana's attempt at recovery. When the pandemic first hit, Carvana was forced to make some difficult decisions. As a result, the company was forced to reduce its staff by 20%. With fewer employees and reduced customer demand, Carvana had to adjust its inventory and focus on cost reduction. To keep customers engaged, the company turned to digital marketing campaigns, offering discounts and incentives on their vehicles. The company also implemented a new home delivery service, allowing customers to have their vehicles delivered directly to their door. This move allowed Carvana to keep their customers safe, while still providing them with the convenience of online car buying. Carvana has also invested heavily in its customer service, offering extended warranties, free delivery, and a 7-day money-back guarantee. These changes have paid off for Carvana, as the company has seen its sales increase by 17% in the first quarter of 2021. This is a huge improvement from 2020, when the company's sales decreased by 10%. Carvana's stock has also seen a significant increase, up 23% since the beginning of the year. Carvana has also been investing in new technologies to improve the customer experience. The company has developed a virtual showroom, allowing customers to walk through their vehicles without ever stepping foot in a dealership. This technology has enabled Carvana to provide a more personalized experience while also reducing costs. The company has also developed a cashless system, allowing customers to purchase their vehicles online and have them delivered directly to their door. This system has been a major success for Carvana, as it has enabled them to reduce overhead costs and increase efficiency. Carvana's fall from grace has been a cautionary tale for other companies looking to disrupt the used car market. The company's success was based on a novel business model and innovative technology, but it was unable to sustain its success due to competition, inventory management issues, expansion costs, and a lack of diversification. As Carvana looks to the future, it will need to focus on addressing these issues to remain competitive and regain its footing. Make sure to click the video on the screen. I'll see you over there.